Hi everyone, John here. Today, I wanted to talk to you about some SaaS companies that are not really exactly SaaS companies, in the traditional sense. We live in a time of fake news, misinformation, and extreme views. Well, AI might be doing everything worse rather than better in this regard. These companies, although selling software, in reality, they are selling the most important commodity of our times. They sell the truth to doctors, accountants, and lawyers. These companies have always done that, at first as books, then as PDFs, now as software, and in the future, why not, as AI. These companies that have seen their stocks plummet the past year will likely still be the ones to dominate the space of proprietary data for law and healthcare. So, for anyone who doesn't know, the release of Anthropic's specialized legal plugin just a few days ago triggered a violent market reaction, raising billions in market capitalization in a matter of days, forcing investors to confront an existential question. Is the proprietary data held by these companies enough, or is it a depreciating asset in a world where AI is already better than most people in synthesizing information? If we look at these companies, they're trading for the same price as they did 5 years ago, and they're down between 40 and 50% in the last 6 months. Of course, I believe these stocks are valuable, so I'm talking about them. First, I think it's important to understand a bit of the history of these companies because they go way back, and you will understand that this is not their first transitional phase. Thomson Reuters was originally built on a foundation of news and global paper-based publishing that slowly transitioned into a financial and legal data titan. In 1851, Paul Reuters starts a new service using pigeons and telegraphs. Meanwhile, Roy Thomson founds a newspaper company in Ontario. In 2008, the Thomson Corporation acquires Reuters Group, forming the Thomson Reuters. In 2018, they sell a 55% stake in its financial and risk business to Blackstone, focused almost exclusively in legal and tax professional software. Today, it is primarily a high-margin B2B software as a service company, focusing on legal corporate and tax services. RELX also has a long history and followed the path from diversified publisher of scientific journals and trade magazines to specialized decision tools. In 1993, RELX was formed by the merger of Reed International and Elsevier. For years, it was a conglomerate owning everything from scientific journals to travel magazines. In the 2010s, the company aggressively sold off its advertising-led businesses to focus on scientific, risk, and legal analytics. Today, it is an information-based analytics company where the data itself is the actual product. Wolters Kluwer is perhaps the most focused, moving from Dutch publishing house to a global leader in expert solutions. From 1836 to 1987, various Dutch publishing companies evolved independently until they merged in 1987 to fend off a hostile takeover bid by none other than Elsevier over RELX. Throughout the 90s and 2000s, it acquired dozens of specialized tax and medical software companies, and around 2010, the company made a hard pivot toward digital, where 90% of its current revenue comes from. Just like the others, they function as an operating system for highly regulated industries where the cost of being wrong is extremely high. So, let's take a look at some of the recent financials of the companies. Reuters reported organic revenue growth of 7%. If we strip out the lower growth Reuters news and print segments, their core segments grew organically by 9%, which is a very good number. The legal segment grew also by 9% organically, and the company attributed this directly to the traction of Westlaw and Co-Castle. The retention rate for these AI-enabled products remains over 95%, underscoring the stickiness of the platform. Tax, audit, and accounting segments delivered a standout performance with Q4 organic growth hitting 11%. Their profitability and margins were reported at an adjusted EBITDA of 39.2, meeting the full year outlook, while the company has guided for further margin expansion in 2026, targeting 40.2%. They have provided the most bullish outlook of the group, forecasting a 2026 organic revenue growth of 7.5 to 8%. The guidance implies an acceleration, predicted on the belief that 2026 will be the year of widespread agentic AI adoption in the corporate world. RELX reported a full year 2025 revenue of £9.6 billion, representing an underlying growth of 7%. Legal was up by 9%, while the uptake of Lexis Plus AI by law firms seems to be accelerating. The risk division is their premium asset, and it grew 8%. This division collects and bundles data from banks and insurance companies, pulls them together in order to prevent fraud. This creates a network effect that is effectively immune to AI disruption, and if you think about it, its importance is only going to increase in future years as con artists get more sophisticated tools through AI. Now, they have been successful in managing the cost of compute associated with AI, and they kept the cost of growth below revenue growth, which, as an investor, of course, is what you like to see. Adjusting earnings per share grew 10%, which is, of course, awesome. Two thumbs up for RELX. Cash generation remains incredibly high, with an adjusted cash flow conversion rate of 99%, and this efficiency allowed the company to deploy a huge, massive £1.5 billion share buyback in 2025. Well, they plan an even bigger one for 2026. They say it will be about £2.25 billion. This signals that the management is bullish for their company, and maybe so should we. Like this. Okay. So, for Wolters Kluwer, they managed a 6% organic growth for the first 9 months, while slightly trailing the 7% of its peers. The quality of the revenue remains high. For its health segment, organic growth was 5%, and while lower than the 6 to 7% seen in previous years, this segment remains a fortress. The UpToDate platform is integrated into hospital electronic medical records, making it extremely sticky. The launch of UpToDate Expert AI in late 2025 is expected to drive renewals. The tax and accounting segment delivered a 7% organic growth, driven by the cloud migration of CCH Access. While corporate performance is the fastest growing division at 8% organic growth. The full year 2025 guidance for profit margin was between 27.1 and 27.5%, and although the numbers are not as impressive as for the other two companies, their stock valuation reflects that. And since it's the only one with exposure to healthcare, I believe this company is also a buy. Now, to understand the strategic landscape of 2026, one must analyze the Anthropic shock. So, briefly, on February 3rd, Anthropic, a leading AI research lab, released a specialized legal plugin for its Claude model. This triggered a massive sell-off in the SaaS space, the analytics space, and the professional information sector. Reuters fell about 17%, RELX 14%, and Wolters Kluwer fell 13% in a matter of a few days. The market panic was driven by the specific capabilities of the new plugin. The tool could automate contract reviews, do non-disclosure agreement triage, compliance workflows, and legal briefings. It allowed users to point Claude at a folder of documents and ask it to do a task. Let's say, flag all clauses that deviate from our standard practice, and it would do that. This capability attacks the corporate growth sector of Reuters and RELX. If an AI can use a $30 per month tool to do that, why pay thousands for Reuters Co-Counsel? Now, even if the prices should have dropped, I believe that it was an exaggeration as the market combined two different types of legal work: internal data analysis versus external law research. For the first, Anthropic and other agents are great. Analyzing a user's own documents requires a large context window and reasoning capabilities, which Claude obviously has. But this is the low-hanging fruit of legal tech. For the second, the external law research, I believe that the moat of these companies is well protected. First and foremost, we have the hallucination problem. Generic LLMs cannot memorize every court case in history. For example, if asked an AI to cite precedents for slip and fall liability in Ohio, let's say, a generic model will probably hallucinate cases which will lead the lawyer astray. Second, Reuters and RELX use this thing called retrieval augmentation generation. When a user asks a question, their system searches their proprietary copyrighted databases, retrieves the relevant text, and then feeds it to the LLM to summarize. Generic models do not have access to these databases, and in essence, this is what these companies are selling. They sold it in text, then in software, and now they will sell it in AI. It's not the information that is changing, it's the medium. And this is the real moat of these companies. Walter Kluwer is the same for healthcare. Then there is the indemnification clause. These three companies provide assurances to their enterprise clients. If their software or AI makes a mistake, that leads to a lawsuit. They stand behind the product. They take the blame. On the other hand, Anthropic and other AI providers explicitly state that their tools do not provide legal, medical, economic, or any other kind of advice for that matter. For a big company, the risk of using a tool like that is unacceptable. Yes. So, when we started the video, I talked a little bit about the history of these companies. Reuters started with pigeons and telegraphs and successfully navigated to so many technological breakthroughs, and they're still among the best companies out there, and AI is just another hurdle to be conquered. Reuters is taking the agentic AI route with their co-counsel platform, which they're positioning as a universal AI assistant. Co-counsel can perform multi-step reasoning. A lawyer can type, read this complaint, research the database, and draft a motion to dismiss. And within a few minutes, they will have what they asked for in front of them, a highly specialized AI rather than generic one. It is being embedded in Microsoft Word, Outlook, and the browser. And Thomson Reuters is committed to 100 million plus annually to AI research and development, and it's planning to spend another 200 million. RELX, with their Lexis Plus AI, is not falling behind either. They guarantee hallucination-free citations. Their marketing strategy stands on the fact that every sentence generated by Lexis Plus is hyperlinked to a trusted source in their database. If the link doesn't exist, the AI won't write the sentence. Furthermore, LexisNexis has launched Protege, a suite of specialized agents for organization, research, and drafting that collaborate to solve complex problems. And the 9% growth in legal suggests this message is resonating with law firms who prioritize accuracy over speed. Wolters Kluwer acquired Libra Technology to bolster its European legal AI. This allows them to offer a sovereign AI compliant with strict EU privacy data laws, a key selling point against US-centric models like Claude. While in healthcare, Wolters Kluwer uses AI to summarize clinical answers. The mode here is absolute trust. A hallucination in medicine could literally prove fatal, and up-to-date brand authority is the primary defense. So, the legal market is arguably the largest profit pool for these companies, and Reuters and RELX is effectively a duopoly for that. For the moment, these two companies are taking different approaches in their AI models. Reuters, with the Westlaw, focuses on granular filtering. They're tagging cases with metadata and that generic AI models can't see effectively, allowing for highly precise searches. Lexis Plus focuses on breadth and visualization. Its line is accompanied by a citation, and it appears to be so good that it has grown to be the industry standard for validating case law. Interestingly, in 2025 and 2026, many large law firms were subscribed to both platforms. First, they want to get the best of both worlds, and second, they are using them to check on each other. Furthermore, this arms race dynamic between these two companies is gonna come out uh, and gets them so far ahead from anyone else that would potentially like to enter the scene, effectively keeping the duopoly safe. The corporate and tax segments are arguably facing the most disruption, but also offer the highest growth potential. On the corporate front, Reuters is aggressively bypassing law firms to sell co-counsel core directly to corporate legal departments. This allows corporations to bring work in-house, reducing their spend on outside counsel. Wolters Kluwer with their CCH and Thomson Reuters with their Checkpoint and UltraTax are racing to build autonomous tax agents. For Reuters, the acquisition of Materia gives them a dedicated agent for audit workflows. On the other hand, Kluwer has an edge due to their deep dominance in the European market, where tax codes are fragmented and complex. Furthermore, they also seem to be pushing into inventory and supply chain compliance, broadening the scope beyond pure tax at the moment. A sector which will arguably see much more improvement through the use of AI due to greater efficiencies in planning routes. For risk and fraud, this is where RELX stands alone in relation to the other two. We have all seen the deep fakes on the internet. It is obvious that AI makes it easier to create fake IDs and synthetic voices. Therefore, banks and insurance companies are desperate for tools to detect them. The risk solution uses device fingerprinting and behavior biometrics to differentiate human from non-human. It goes without saying that this data is not public and cannot be replicated. Therefore, this segment acts both as a growth catalyst and as a massive hedge. If AI gets so mind-blowingly good it destroys the legal business, which is highly unlikely in my mind, the risk business will have to grow because of the chaos that AI will create in fraud. Arguably, this makes RELX the most anti-fragile of the three. Now, the companies are utilizing their strong cash flows in markedly different ways, reflecting their strategic priorities for the upcoming decade. Reuters has the strongest balance sheet, with a leverage ratio of just 0.6 times. This gives them ample options if they wanted to reshape the company through acquisitions. RELX has more leverage at 2 times net debt to EBITDA. And what they have, though, is their massive buyback program that will surely drive earnings per share growth even if top line growth slows down. And Wolters Kluwer follows a more balanced approach between the two, with a leverage of 9.6 to 2.2 times and a modest €1 billion buyback program in 2025. Their investment strategy is heavily skewed towards internal product development and migrating their services to the cloud, and the focus of building even more stickiness to their products, of course. Following the Anthropic shock, valuations across the sector compressed, creating a potential entry point for long-term investors. RELX is trading at a PE ratio of 19, down from its impressive historical average of 35. Reuters is trading at a PE of 26, reflective of its potential growth according to the market, and Wolters Kluwer is trading at value territory with a PE of 13. A rising risk factor in 2026 that could arguably help Kluwer more than the rest is something known as data sovereignty. So the EU AI Act and various national regulations are passing laws that could create fragmented AI markets. If we hypothesize that the US prohibits exporting advanced AI models overseas, or if the EU mandates that AI training data must be locally sourced, global platforms like Lexis Plus and Westlaw will face fragmentation costs. WKL is a Dutch company, RELX is a UK-based company, and they're well positioned here due to their decentralized multi-local structures. Reuters, on the other hand, being more US and Canada centric, may face hurdles if they wanted to expand to Europe. Thomson Reuters is the high beta offensive play. Most believe their co-counsel brand is in the best position to capture the upside of the AI supercycle. However, it also carries the highest execution risk. RELX is a defensive play due to its risk division and the massive share buyback program, and the WKL is a value play. It offers stability and exposure to the non-cyclical healthcare market. For me personally, unfortunately, I bought RELX and WKL just before the big drop, and I was able to pick up some Reuters stock right after that. In my opinion, in oligopolistic settings just like that, better to bet on all the players than pick a side. Just like I own both MasterCard and Visa, I believe this has to be the case for these three companies as well. I will treat them as a group for the information sector of my portfolio. These three oligopolistic companies have built deep moats of proprietary data and workflow integration. While generative AI lowers the cost of generating text, it increases the value of verifying it. And this is where these three shine. In the modern world of infinite synthetic content, the truth that is held in their databases becomes the ultimate scarce resource, and that's why I believe these companies are a buy today. Because, well, the real winners in 2026 will be those who successfully sell truth as a service. That's all for today. Thanks for watching, and I'll see you next time.